Yo, what's going on my people? HumidityLiquidity here. Welcome back to a brand new video. So in today's video, we're going to be going through the keys to daily bias. So right before I get started, I'm going to go through what ICT in his 2022 mentorship on episode 40 said about daily bias. Everyday bias is unrealistic. So we shouldn't expect our bias to be 100% every day. We shouldn't expect huge price runs every day. And we should always determine the likely weekly expansion for the week. After we determine that expansion, we look for obvious liquidity in that direction. Then we look for imbalances in price delivery, starting from the daily or possibly weekly, and then going down 4 hour, 1 hour. And then we look at high or medium impact news, or both of them. And then we can focus on our directional price runs in the kill zones. So 8:30 to 11, around that time. So what is daily bias? So when it comes to daily bias, our objective is to determine where price is most likely to go for that day. So the first thing you'd ask yourself is, has a major swing low or high been taken? If so, do we have a market structure shift? Is price bullish or bearish? Those are the type of questions you want to ask yourself. So over here, have we taken out a major swing low? So over here, we've taken out this swing low. And then we've taken out this high over here, causing a market structure shift. Now, after that market structure shift, we're going to be looking for a fair value gap or an order block, or any PD array that you wish. And then we're going to look at the price range over here, the swing, price swing, right here, from premium to discount. So this red area is discount, green is premium. So we want to look for trades in discount. So over here, we have this portion of this fair value gap. Or if you're using the order block, you could also use the order block. Now over here, we'd use the order block since that is the most clearest thing, the clearest PD array in this discounted region. So after price comes into this region over here, we need to make sure that after high impact news, we can trade to our drawn liquidity, which would be above over here, which would be this fair value gap fill, and then towards this high up here potentially. But you could also look at this high as a potential stop-in area for some sort of resistance. So yeah, those would be the areas, and then you could potentially look at some new week open gaps or whatever you like, but you don't need all that. So I'm just going to go through what I've said so far. First thing we want to ask is the order flow bullish or bearish? Where are we? Are we on the sell side of the curve, buy side of the curve? What does the market structure look like? Now, second thing is, what do we think price is most likely to do? Has any swing lows or highs been taken? If so, look for your market structure shift, then look for a potential reversal in that area. And then once we get that market structure shift, we wait for price to start retracing, get our swing, so from the low to the high, and then we look at a 50% premium discount of that range. And then once price comes into our PD array, we look at Forex Factory or whatever news source you look at, and we look if it's high or medium impact news. And then once price is within that, we wait around 15 to 30 minutes, and then we can trade for our high probability entry. So the directional price swings must be within the kill zones. Now the key thing in all of this is time. So for you to get your highest probability entry, price must be within the correct time. Now, over here, what do we see in these highs? There are no imbalances. Okay, there's no fair value gaps, nothing there to stop price and potentially come down, break structure over here, and then continue down. So over here it was clear that it was going to be attracted to this high and then continue going above over here, as we could see over here, and the way the market has moved after tapping this PD array, order block. Now, every single day, your goal is to find a setup in the direction of the drawn liquidity. So you want to use the daily chart as your narrative. So if your draw's on buy side, that's where you aim. That's where you want to look for liquidity. And then your main thing is to never force a setup or trade. And you must always follow strict rules of your model. So you don't purely just say, okay, we're bullish today, let me take a trade. Your model must form, plus your bias, in order for you to take that trade. And make sure you stick to sound risk management. If you take a trade, 1% risk, and you lose it, half your risk, 0.5%. And then you could take another one, and then you could just stop for the day, 2 trades a day, 1.5% risk loss maximum. If you win, then you've recovered that easily, and then yeah, you're good. So yeah, here I hope I've simplified daily bias as much as possible. This is all you need. We can go for another example. So let's look at the last week of March right here. So last week of March would be from this Monday to right here. Now, over here, how would we know that we're going for this buy side liquidity? Buy side over here is quite clear. Now, why is it so clear? There's no fair value gaps, nothing in this area over here to stop price. This fair value gap got traded through, becoming a balanced price range right here. So we know that price is definitely drawing for this high over here. That's the most likely area. Okay, so new week has started. We look for a fair value gap. Okay, so here we have our fair value gap. Price draws into that fair value gap right here on Monday. Now over here you can go to a lower time frame. So you can go to the 4 hour, use the 4 hour and the daily. So we can go premium and discount. So from this swing low to this swing high, what do we see? This fair value gap is in line with that 50%. Let's go on a daily one more time. That fair value gap, 4 hour, right there, 50%. What happens? Price comes in at 2 o'clock, 6, 10, starts expanding up after taking this area of sell side liquidity here. So yeah, this would be your type of daily bias. And then Tuesday, you check if there's any high impact, medium impact news, and then you'd continue trading until that drawn liquidity. Wednesday as well, you'd also use that same logic. But yeah, I've outlined the framework for you guys. Remember, daily bias is not everyday bias. And yeah, never force a setup. So yeah, I'm just going to keep it simple. Hope this was insightful, guys. And I'll see you guys in the next one. Peace.